You do it from Thursday into Friday, and you sell those just in the money. You pop, and then if you trade 1804, something like that on Friday, well, then this is a good put credit spread. That might be a trade worth looking at. It's a little tough, right? Because it does have to rally those $10, but you do it because there's a relatively low amount of risk in it. I will have a better feel for that probably by the time we get into the end of the day. And then I have looked at Netflix. Remember the advice given on this one, and this is the kind of theme that I try to maintain when I run charts with you guys, which is to say, certain charts are going to have a theme, and I stick with that until there's a new setup or until the idea behind it changes. And for me right now with Netflix, the main thing is range bound trading right through here. I've got a spread on it that will expire this Friday. Once that gets through, I'll assess and say, was that a good idea? Did we make money off of it? And then we'll start with the next batch of ideas. But for now, I think it's still relatively neutral. And then Mercurius mentions the move in Apple into 200. I've got it at 199.81, and we covered it briefly this morning with me telling you, it's going to be an interesting morning. I think there's the chance that it continues to push up into those bigger levels. Of course, you also know, I mean, I can think of a couple of traders right offhand that are going to sell it at 200, right? And I don't mean sell it because they've been long. I mean, that you're going to have people just dying to short it at 200. I'm curious how much heat they're going to get to take, right? Is it 201? Is it 206? It's just an area where I can't really start making, a lot of other judgments against it. I just have so little edge with it. One thing, just to kind of, and I'll stop talking about Apple after this, but we talked about that range bound trade in Netflix. Apple at 200 might be another spot to do the same thing also. I think it's a little bit too early to start thinking about pins for the August series, right? We're a little ways out there. But man, if it doesn't, it rings a bell, right? I think there's definitely potential. So if you sold the Iron Fly right here, let's just consider it $10 wide to start. This may be all over the place before you get into that day of expiration, but you're getting better than a 1-to-1 risk reward ratio, and it's just based off consolidation at 200. I don't mind that idea at all, but I think I'll hold off of it for right this second. It is definitely something to consider with Apple. It's such a big psychological value. And then can you take a look at Shopify, notes on NVIDIA, and Google? So let's update these charts. As everything here again, just I always, um, wherever I heard it's like Gomer Pyle on Valium. It just makes me kind of laugh when I think about like, yeah, it's just back to happy go lucky. I'm not quite that way of thinking just yet, right? I'm still maintaining a slightly more cautious tone rather than um, everything just being all right. Taking a look at Shopify, probably just another testament to the fire lines. Give David a high five the next time you see him. This is some of the best work I have ever used. And in that way of thinking, now granted, I know that this is hindsight, right, Natalie? I mean, I haven't been trading Shopify, but at the same time, just when I have to kind of look at a fresh chart, I have to point it out. So that was your big area there that it has failed from, with earnings that were due out yesterday morning. I don't have a setup here. So, a lot of these charts, if I brush over them, don't take it personally. It's just saying I'm kind of glancing at it and nothing stands out. If I really drill down to give you a complete and thorough chart, there might be some symmetry in here. You can see some respect of that, and you can also see how the 34 on the weekly is a level that I generally like to buy, and you're right down into it. So it's just always so different because I don't know if you're coming at it from a point of view of like, hey, I'm short this, where do I take profits? Or I'm long taking it. You see what I'm saying? So not knowing more of a background on the trade and not having any type of a setup to really push on it, I think I have to, that's the best I've got in that one. I will look at NVIDIA with you again, Ryan, because I've been following this one pretty close, needless to say. The 15-minute squeeze we mentioned earlier may give you some opportunities. I just don't know that this is really the day that I feel like I can jump out here and catch a day trade on this, right? I feel like you start buying more of it right here, it'd be just about the point that things kind of calm down and chop into the afternoon. So, from a swing perspective, trust me, I want to see NVIDIA higher. Maybe this is the catalyst to begin that process. I just think I'm gonna, because buying strength like this morning sure feels like a way to just be sitting here in a couple of hours when things calm down a touch, and not really wanting to be there. Um, but that's what I've got on that so far. And then a further question, what price action might get you bullish long term on Shopify after the huge wreck after earnings? All right. Well, that's a little more of an in depth question, but I also think I can answer it very simply, which is to say, and I guess you take it from 2 points of view, right? If you're trading it from the weekly, it's a little bit of a different perspective than the daily. For the daily, when you ask me what would it take for this chart to become in favor for you again, it would take a recovery of the 8 and the 21. And sometimes that's why these charts like this just have to take a back seat for a while and have to be somewhat retired, because that may not happen for a long time. So really, I just think Shopify is going to be in a spot now because this is right. I mean, it's going to be choppy. I think that this kind of establishes a range around it. And for price, when for me to want to get bullish again, it's got a lot of heavy lifting to do. So it's really just easier for me to say that that's probably not going to come into favor for some time. And I just have to just got to be patient with it. Let me take a look at Google. I wanted to run this chart with you, though I haven't looked at it today. It came back and very cleanly filled the gap from earnings. I guess it missed it by a couple of pennies. The low being 16.19 and the gap fill coming in at 15 and a dime. So, probably close enough. But does it warrant a new setup? I don't see it. Google's a company that I primarily want to focus on to the long side, and I think that this would be a very tough place to do it at. You did have a 39-minute squeeze, but I'm not going to try and trade those 39-minute squeezes when I don't feel like I have a good enough setup on the daily. Like a lot of these charts, let them come back down here into the 50-day, just like it did back here. And that's where I think you start having a little bit more of an edge with it. And then I still hold Etsy. Earnings are next Monday. Do you have any recommendations there? Let's check that out. Yeah, and thank you for the heads up on the spread, Hawaiian Cook. I try to keep an eye on those chat comments as they come through. Of course, right there with the management of my positions, but I always appreciate the heads up. And I did cover that in Apple, so now I have no upside risk. The unbalanced fly will likely just take in the credit we received. I try to keep an eye on all these different things that I'm watching throughout the day, but I will never turn down a little help. So thank you for the heads up. But when you ask me, I still hold Etsy and the earnings are next Monday. What is the recommendation? This is an easy answer because you have to come back and ask yourself, did you have the intention to hold through earnings, or was it just a into earnings type trade? And you've got to be careful with this because I don't think it's the way that you want to pursue things to be, because it's all too easy to get to this day of earnings and kind of be in a choppy spot, maybe down a bit, whatever it may be, and just say, to heck with it. I'm just going to hold this through earnings and see what happens. And I would really encourage you to not do that because that type of attitude, or just, talk about personal experience. Whenever I'd be in those spots, inevitably it would just add insult to injury, and you're going to find it back down here filling the gap fill. So just assess it and say, was this a trade into earnings? Or were you really prepared to hold through the report? If it's just a trade for earnings, then you get out of it before the results come out, and then you can set up a new trade for the report itself if you would like. So at this point, I've got to think it probably just consolidates until their numbers come out. I love Etsy, and that's the thing that's tricky about this is just because I like it does not mean that it's not going to come back down here and fill this gap. I saw this the other day too. Somebody was talking about it with Facebook, how all gaps like to at least be filled partially. And I tend to agree with that, right? Now it's all going to be a matter of timing. The idea with Facebook here is that when it gets above 180, that we'll get a chance to buy it for a move into 195. And I like that idea. It's something I'm keeping in the back of my mind. I guess it just comes up for me because when I look at Etsy, it's thinking, these gaps tend to be filled. I don't know that earnings will do it, but it sure looks like a kind of a precarious spot heading into that report. And then let's check out HPQ. And Tom, you mentioned I took that 2 days ago on Amazon. That's awesome, right? Always fun when you can say like, hey, that's my idea. But we're very much on the same page, and I think you know what I'm saying too, where it's like it might not come through, but if it doesn't, the risk is pretty well defined, and if it does, those quick decay type positions, those are awesome when they work well. Taking a quick look at HPQ, definitely worth looking for a trade on into earnings because the previous report caused a really nice move. Now, there's all types of different um, variables that you can plug into this stuff, because you can say, all right, if the last earnings drove it 2% higher or 3% higher or whatever metric you'd like to use, what effect does that have on the report just after? I don't know that I would have any specifics to give you, but it just seems like, hey, this was a good report. Can this one have a little bit more excitement around it? That, combined with the idea that you've got a fresh daily squeeze, probably gives you reason to look at it. The next thing I would do is say, what is the actual date of the report? And this is due out on the 23rd. So the 23rd, looking back, that would put us on the 9th. So this is not going to be a blanket thing, Jeannie. It's going to be, a little different for the various names that you may be looking at. But I found that 2 weeks tends to be a sweet spot. So rather than buying it today, maybe see if you could pick it up in 9 days, a little bit cheaper, and then you might be getting ready for the run into earnings on that one. So I'll write that one down, and I'll try to get you a little bit more back testing data with it, because anytime you've got a squeeze after a report that has been pretty good and you're getting ready for the next one, I think that's worth, providing some focus. And then let's take a look at Zendesk, not Zenefits. I always laugh when, uh, obviously, just in a friendly way, but I'd hear John call this one Zenefits, and I'm like, no, no, it is not Zenefits. Zendesk. I'm not sure if I think they are two completely different entities. Anyway, um, I don't know that there's anything for me to do on it here, Christo. I think the idea of it being, obviously they're doing something right. Isn't this weird to see too? Look at that weekly level. I talk about this with you every single day, and it's interesting to see here because a wild wick, right? But still responsive buying at the 10, and it's just right there. Not really anything I could set up for a new trade on it though. And then could you check out LYB for earnings? And no problem at all on Shopify, Natalie. And just for a future reference for everybody, if you've got something more specific that you want to look at, let me know, and I'll try to narrow down my analysis. But I don't mind taking a general look at stuff with you either. Looking at LYB, let's make sure. Let me see where the date is exactly. So you've got this due out. It's going to be Friday before the open. Sure looks like it has potential. Now that's just, you say like, what does that comment mean? Well, the weekly squeeze fired long, so I'm generally going to err in favor of that pushing higher. The daily also has a squeeze, so I would say that that's generally beneficial. And then the next thing I would do in LYB is just make sure that I've got weekly options, which I do. Then you look at it and say, do those weekly, there's so much of this that you kind of just do by second nature. But just to run through it with you again, you say, all right, I've got weeklies. Do those weeklies have twice the implied volatility of the back month? They do. It's almost perfect, right? You can see that in here, 27, 25, that's kind of the going volatility. And then this weekly series is sitting at 50. So that's not bad. Then you think, all right, how would you try to sell something like this? Let's look at the volume and the options. Gosh, maybe kind of tough for me to recommend this one, Will, just because these are so thin. But I would say if you want to play it, you probably just look at it pretty much straight up and you sell the 112 put and then buy however much protection you feel comfortable. These dollar wide strikes are always nice because you can get very granular, right? You can get exactly the type of risk rewards you're looking for. But that's probably what I would look to do there if you like it. And I think I think that's an okay idea. And then don't you think you give too many disclaimers? Absolutely not, Sam. If anything, and if you read some of the or have worked with some of the people that I have, I think you would say, hey, you should probably double up on disclaimers. It's interesting to me how people are so willing to throw themselves headfirst into something that they have never done before in a very aggressive, You're playing against the best people in the world, and traders jump out there and put money at risk that they have no idea what they're doing. So no, Sam, I would take I would take the other side of that comment. So um, I'm always going to try to make sure that people are very cautious with doing this type of stuff. Always better to err in the side of caution than people not knowing what they're getting into. And then any thoughts on trading Google versus the Class A versus the Class C? I just always focus on Class A shares, and I don't know that there's a whole lot of, I suppose you could trade the Class C also, just in a just a pick, right? Because I don't need to run both of them, so I just always tend to stick with running the Class A shares and whatever I'm looking at. And then I am going to look at rolling some dice on Tesla. I'll look at the ideas with you a little bit more when we get into that discussion here in a couple of hours, just because I want to focus on it at that time. Also know that Danielle will be in for the close today, so I will share every idea that I have, and then, do whichever of them you see fit. I think it's a really tough trade. I think it's one that you want to be completely emotionally detached from, and I think I'm going to try to sell some premium on both sides. You can get into some pretty interesting discussions here where if you want to just keep it simple, well, I'm, and we'll talk about this more in a bit, but when we do get through all of it, this is kind of the trade that I'm wanting to set up with you. And there's a lot of different ways of getting to a risk profile like that. But I think that's kind of what I'll be working with on Tesla. And then Boeing is sexy here with the 4-hour squeeze, the 521 cross. Well, how do I, it's tricky, Timothy, because I agree with you so much. And that's where I was saying, I have that one call out in December that I'm really going to sit on, and I'm just not going to take a stop, right? We'll get to see how it does in December, and we'll revisit the idea from there. If you're willing to step in front of this, I would say do it, right? And Danielle did it, right? I think she's got a perfectly fine suggestion. I think you could do it a couple of different ways. I guess I'm just a little bit hung up on wanting to buy 352 as opposed to 358. But no, you are absolutely right. And it is really doing a great job today. It's going to be interesting to see, right? Which of these ends up winning out? Does the Dow carry us higher, or does the Russell break down to the short side? I don't do a lot of pairs trading, but it seems kind of like an interesting idea, right? Be long the diamonds and short IWM. Let me take a quick look at Win for you, and then not to belabor Apple, but I was lucky enough to get into a 2.5 wide standard fly and have tripled my money. Do you recommend that I keep holding? Well, awesome trade, Dave. And I just was my mindset on it yesterday was thinking a little bit more like staying below 200, but I'm glad you caught that. I think that was more what Neil was suggesting, and it ended up being a perfect trade. What I would tell you to do with it is to take off half, right? At least, because if you can take off half your position that you tripled your money on, well, then you're going to have a free trade in the remaining piece of it. And that just offers so much peace of mind, I think, to say, all right, I've made money on the trade. And overall, there's no way it can go against me, even if the remaining part of the spread doesn't work. So I would say take half of that off as an easy spot to book it. And you can do, however you think with your position size. Like say maybe you have 10 of these. All right, well, if you have 10, maybe you take off 7 or 5, whatever just makes it so that you can sleep at night. And then I would take at least one of them and try to push it all the way into Friday. Because with that one remaining butterfly on Friday, that's where you kind of leave yourself open to whatever the market wants to give you. And you say, hey, if you want a pin, awesome. I will take that off on Friday. It's just there's nothing we can do to speed up the weekend getting here, right? You just have to. So hopefully that helps, Dave. Take half off so it's easy to manage, and then the other half you can just sit there and say, if it decides to pin at the end of the week, then I'll have a really nice trade on. If it rolls back over, then you've at least paid yourself. Never show weakness. I'm with you, Tom. I just want to be so clear on stuff like that, right? Like I think risk is paramount in trading, and if anything, it's people don't spend enough time on it. So I am more than happy to talk about it each day. Anything I can do to help you not go through the things I went through, right? That is my whole mission. And then earnings today on win after the close. So I was thinking that you look to win for support here around 160. I can't say that this weekly chart is all that favorable. So when I looked at it with you last a couple of weeks ago, remember it was an idea of playing it, for a bid against the fire line. The fire line is still holding. I don't know that I'm going to be that excited about trading win earnings. Maybe you could do something neutral around 160. As of now, I think that's a chart that I'm going to avoid. And then I have covered all my upside targets in Apple, mainly the fire line. And then Tesla scheduled to report after Wednesday's close, modeling the company to lose 281 on revenue of 397 billion. Key areas to focus on are the report and the conference call. I agree with you on that for sure, Natalie. The numbers are just the numbers, right? But if there was ever a company where the forward guidance is important, I think that Tesla you could say that about them. So it will be very interesting to follow. And then maybe you could put your disclaimers in numbered paragraphs on the site, and then to save time, you could just call them out. Jerry, that may not be a bad idea. Like I was saying, after you've kind of worked with people and tried to, it's just interesting trying to help people through this type of stuff. And a lot of them think, man, I've heard that comment before that if I would have known better the risk I was getting involved with, I would have done it differently. So I just like to talk about that, make sure everybody knows. And then Crystal, you say the low is 352.23 on Boeing. You're probably going to get me, maybe convince me to come in here and buy it. When I was running the 15-minute chart with you, the level I had quoted was, I guess it's a little bit lower, right? The gap fill is actually 351.56. You mentioned the low for the day. I actually have that at 353.20. So, I can appreciate your comment. And remember, we're really just kind of splitting hairs on a very nuanced thing. I want you to know I like Boeing long, but I just don't want to be coming up here and loading up on my calls here when I really want to do it back here. If you're not afraid of, and I shouldn't say afraid, but if you're willing and accepting to take that, the decline, then by all means, pile into it. But I want to have a little bit of cash on hand if things pull back and not sitting here 100% long. I really think that this, it's a good spot to talk about that. And oh, awesome, Timothy. It is my pleasure. I am so fortunate to wake up and do this with you guys every day. It is obviously every day is not quite as exciting as some based off the trading itself, but just the fact that we get to wake up and do this, I always try to acknowledge that. I think that you're starting to see a little bit more of that, kind of the bids falling out of here, like we were talking about, like with NVIDIA. It's like, I love this chart. I want it. I'm thinking NVIDIA goes higher, but you don't want to be buying it when everything looks so good. And then the bid kind of falls out of it and we go into this, afternoon chop. And then Linta, great minds think alike. I'm long the diamonds. Well, it's not to say that when all of us share the same idea that we're going to be right, but I got to catch a little bit of Ragi's discussion yesterday too, and it sounded like she was pretty much, you know, that she was bullish on this too. So I always appreciate her analysis. I listen to everybody that I can. You're just going to find some that fits in more directly with like, hey, that's exactly what I'm trying to do too. So I think pretty much all of us are leaning in that direction. And of course, that Boeing will be leading that because some of the other components of the Dow are maybe a little bit more choppy, but, along the two of those, I am all about it. That's good, Tom. I appreciate you being here each morning, and I hope you're enjoying the the retirement side of life. I think that's got to be pretty awesome to wake up and get to do this each day, just like I was sharing with you that I get to do. It's really awesome to get to pursue this vocation. And then any thoughts on Burlington? And did you comment on REGN? So I did look at REGN, and I will look at it with you again from 11:30 to 12:30 Central. I'm going to make a point during that hour to at least discuss, and we've got a couple here on the list today, but at least Tesla, REGN. I've got SQ we'll spend a little bit of time on. And there I'll dive in and actually we'll price out some exact trades. The main thing I was saying, or at least I think, is just try to do a cheap butterfly up here where if you're right, you can really get paid on it. And if you're wrong, there's not too much risk in it. And then let me check on Burlington. Really just doing kind of more of what it's been doing. We looked at this chart a couple of times, and all you can do on this is look at it and say, well, it held the 50-day here, it held the 50-day here, and it's trying to hold the 50-day now. What I would use for a trigger to buy this, if that was what I wanted to do, is I would say I need to see it hold the 50 and then get back above the 8 and the 21. A complement of the shift of the parabolic SAR would also be helpful. So not a bad chart, but there's so many of these, and especially from coming from that, directional call type background, that I just really think it's a spot to be careful, as a lot of these have just been trading sideways. So I'm trying to avoid spots of getting into things long where they just sit there and chop. Of course, it can always be tricky to time those. But I just really feel like, because this point in time seasonally, the first 7 days of August are not historically the strongest periods for the market. So, as you evaluate some of these, it's just keeping that in the back of your mind as you consider, these one-off like Burlington or, whatever it may be. Good deal, Trade Raven. I appreciate the feedback, and I think, I enjoy you guys sharing this stuff because I know you're doing just like I am, trying to find what's the next good trade. How do I kind of keep my head on straight as I evaluate it? So thank you. And it's great sharing these ideas with you in the morning. And then Sam, I closed out Akamai at $4. I figured I would cut and run that one early. Well, Sam, I always encourage you to follow your own plan. I am forcing myself to stick with this for now, just because it's right there at that weekly range. If you wanted to cut it, to your point, I'm down about $1 on it right now. And once again, we all just have to live with our own decisions. I don't think that this will be that big of a deal one way or the other. But if I see I just feel like if I got out of it right now and then I did see the bounce back, well, then I would just regret it, because I'm like, well, there's the level. We talked about this all throughout yesterday's close. So if that's what I'm talking about, wouldn't I be kind of just disregarding the plan? That's the whole reason I point those levels out, is to try and work with them the next day. So it's not to say that the level will hold here again. It's just to say it has been hit. I at least have to give it a shot. And then, do you think the markets are supported by Apple earnings, and this could fall in the coming days as the ticks are negative, the skew is high, and the advanced decline is negative? VK, I have been looking for a significant pullback in the indexes for the better part of 10 days, right? I mean, give or take, and I haven't been aggressively short, so please, make sure we're clear about that. But when you make that slew of comments there that you did, I couldn't agree more. I everything that you mentioned is lining up for the potential of this type of a decline. IWM still, this is kind of the avenue that I'm taking for it. And I'll tell you too, that I try to trade this stuff a little smaller just because it helps you keep your emotions out of it. And I think that that's the main thing that I really try to focus on. But if you look at this and you want to trade bigger and you want to, I think this is a trade, right? So when you mention all of these warning signs, I agree with you wholeheartedly. And I think that the best place to do it is through the index that I think is the weakest, right? I'm not going to try and short the Dow, but yeah, I think you've got good potential for a significant decline. And I think the easiest way to play it is going to be through the Russell. And then it's been good so far, 4 weeks in, and I still have to work on making more cash side. Well, I'm right there with you, Tom, and I will continue to pursue that as long as I'm lucky enough to be here with you guys. And then STMP. Let me look at one last one, and then I will turn things over here at the top of the hour. Stamps.com. These types of charts, I just sit here and kind of, the options market in this one is tough. And this is probably why I'll just glance over this one, because, you've got about $1.50 width on these spreads at least, and it's not really a very easy place to trade. But what do you do with a chart like this, right? I just feel like it's such a risk. It's so, and if you wanted to just take some type of a risk, I would probably gamble with this one to the downside, right? It's just taking a shot at it. But I think that that's a tough spot to say, hey, let's just buy that one too. So, anyway, I'll talk about that a little bit more when we get into that 11:30 session. For now, I think that's probably one I would avoid and, instead focus maybe on trying to call a trade in Tesla. I'm still managing Akamai and, those are my ranges. We'll see how they end up playing out into the end of the week, but you know why I think we have reason to continue to hold. And I also think if you're willing to take your life into your own hands, maybe you look at the short 70 puts for next Friday. So anyway, take that as you see fit. We will revisit these ideas when I come back here during the lunch hour. And until then, I think you just try to be patient. Consider chop into the FOMC this afternoon, and then we'll take it from there. So you guys have a great rest of your morning, and I'll talk to you again in a couple of hours.
Good morning, everybody.